Let's see. No, see if it's here. Participants. Okay, I'll see if that comes on. Okay. Let's do this DocuSign. So let's do this first. No, I don't need that.
May I ask who the other broker is that you went to?
I don't remember the name.
Were they small or big?
Mom
They
and pop?
were really small, yeah.
Yeah.
And I did have another.
The name recognition too. I mean, if you join the big companies, such as the one, Remax, Keller Williams, it's an automatic respect and trust.
Yeah.
Compared to, you know, ABC Realty. Who the heck is ABC Realty? When you say
Yeah.
Keller Williams, you must think instant recognition.
Hey guys, we're gonna get started in a sec here. So hold on.
Say Jack's wrong.
Jack's wrong. You can change it. So hold on. I'll be up in a sec. So hold on a sec.
Says Jack's wrong. No, it's company is up.
Must have been a thing with Jack's last, the new sign in.
I wonder why he says Jack's.
You must have done a Zoom on their last. Something.
Rename.
There were and $9 more. And how
Hello, everyone. How's it going?
Hi there.
Did you fix your name? Javier Ron.
Hey, can you hear me, John?
I can. Okay. One second. Let me get this going here. Okay, let's get this going now. Okay, I'm gonna push it here. Boom, boom, boom. All right. Let's get this started. We have some more SVPs. I don't know where they went. Okay, well, we'll figure it out here. All right. Financing. We're doing financing today. One of my favorite, but one of the ones that usually scores the lowest because people have a hard time adjusting to the financing side of things. So let me get this bigger. Generally, straight notes are blank notes made for short terms and renewable at the end of the term. Oh, by the way, this is interactive. So what'd you say?
C.
Correct. They are both A and B, which means they're non-amortized and interest only. So when we say a straight note, typically these are like hard money loans where they'll say, we'll loan you $100,000. It's 10% interest. All you have to do is pay the 10% interest each month. And at the end of the term, you pay the 100,000 back, right? So that's typically what we call a straight note. The Government National Mortgage Association, otherwise known as Ginnie Mae, is an agency of the U.S. Department of Housing and Urban Development. Ginnie Mae's activities include what?
Think that's going to be D.
Correct. It is D. So Ginnie Mae, we talked about the primary market, secondary market. We know Fannie and Freddie. Ginnie Mae is a secondary market person that handles all the FHA and VA loans. They do all the government insured loans. Home ownership under Veterans Administration allows qualified buyers to buy a property with blank down payment.
A.
Okay, so,
Yeah, I
correct.
think that's 0 down. Yeah.
That is 0 down. You are correct. Once a borrower has paid to completely off his CalVet loan, the California Department of Veterans Affairs issues blank to transfer legal title to the borrower.
Would it be a quit claim because they used to hold the claim?
It's called a grant deed
Ah,
because they are considered co-owners of the home with the borrower when they do a CalVet loan. So when they pay off the loan, they grant the rest of their rights to the owner. The cancellation of contract and restoration of parties to the positions they would have taken if no contract had ever been formed is known as.
a rescission.
Rescission, that is correct. Rescission. The FTC enforces TILA. FTC stand for what?
B.
Federal Trade Commission. It's easy. A trustee sale. Ooh, what's a trustee sale? The proceeds will be distributed to the what? To whom?
B or D.
It is D, all the choices. So typically when they do a trustee sale, which is a foreclosure sale, they do cost and expenses of foreclosure sale. So how much, what does it take to do the sale? Then they do the first deed, then they do any second or third liens. That's how the order they go, right? Time and place. I mean,
What
time.
about just like a trust sale? Like actual, the home is in a trust, and they're still alive and they still own it and they decide to sell it.
So a trust sale is different than a trustee. So a trustee is typically a foreclosure. A trust sale is when you sell a home in a trust, which is fine. The trustees can sign. There's just some additional documentation to verify that they are the trustees and that they have the power to sell that home, right? There's some additional documentation as well. So
Got it.
a trust deed is similar to a mortgage, except there are blank parties to the transaction.
D. 3.
Correct. There are 3 parties to the transaction. The trustee, the trustor, and the beneficiary. There we go. Hello, Kathy. Welcome to our training. The nominal interest rate is blank. What is the nominal interest rate? We use this term a lot, the nominal interest rate.
A or D.
It is D. So it's just the stated loan or deposit. So nominal is just another way to say that's the interest rate you're getting, right? Blank is the value that an owner has in a property over and above the liens against it.
A.
Correct. Equity. The process of selling closed loans on the secondary mortgage market is known as what?
B.
Warehousing. We have not been stumped yet. This is it. Under the CalVet loan program, the blank holds title to the veteran's property until the land contract is fully paid off.
A.
Correct. So CalVet is different than your typical VA loan, which is the federal level. The CalVet loan, they do a land contract, which is different, meaning they own the property and the owner slowly gains equity. Traditionally in California, the owner owns the home, right, and just has a lien against it, right? Okay. Blank market is the resale marketplace of mortgage loans.
A.
And correct. In a deed of trust, the one who signs the trust deed is called the trustor, also known as the who.
C or A.
They're the borrower.
Ah,
The borrower. So remember, there's three parties, right? When you try to deed of trust, there's the trustee, the borrower. I mean, the trustor is the borrower, trustee is the third party, neutral third party, and the beneficiary is usually the lender. One of the prohibited acts of practice in advertisements for credit securing a dwelling is misrepresentations about government endorsements. Unless the advertisement is for an FHA loan or VA loan, it is misrepresentation to make one of the following statements in an advertisement.
C.
The Federal Housing Administration provides mortgage insurance on loans made by FHA approved lenders throughout the
A.
No, it is C, both US and US territories. The beneficiary under a deed of trust is the lender. The lenders can be who? Hey, Kathy, are you there? Are you able to participate?
Yeah.
Okay. There you go. She said D. That is correct. It is all those people. Blank is the gain or loss on an investment over a particular period. Ooh, what do we call that?
C.
Correct rate of return. Good job. A package mortgage is a method of financing used to cover real estate, property improvements, and appliances. Example of basic appliances covered by the package mortgage are what?
D.
D, yeah.
Correct. In general, foreclosure time on deed of trust in California takes about what? Ooh, this is a good question. How long does it take to foreclose on a house in California?
Think it's C.
I'm gonna say B.
B. It is actually A, 115 days. When you don't pay your payment, they will issue what they call a notice of default. And the bank must wait 90 days during that notice of default before they can issue what they call a notice of trustee sale.
That's what I got confused, the waiting of the 90 days. That's
Yeah.
why I said, okay, but it's
Yeah.
115. Okay, all right.
So 90 days, and then 20 days after the trustee sale, you can sell the home, but there's a 5-day waiting period once the notice of trustee sale is issued. So there's usually 25 days. So we say 115 days. On October 3rd, 2015, TRID became effective. TRID are new federal rules which combine TILA and RESPA. Which of the following disclosures are combined under the TRID rules?
C. Oh, A.
A,
No, it was C. You're right. So TRID, which is, remember, there used to be 2 laws prior to the Great Recession. There was TILA, the Truth in Lending Act, which was with the Fed, the Federal Reserve Bank, and then later on they passed RESPA, which is the Real Estate Settlement Procedures Act, and that was with HUD. And part of the reason they blamed why the crisis happened, the mortgage meltdown, was because there's two regulators over the industry, and it was confusing, right? So they made, they essentially made, what do you call it? They combined them under a new regulator called Consumer Protection Bureau, Finance, CFPB, the Consumer Finance Protection Bureau, and they were responsible for combining disclosures. So Fed had one called TILA, and the RESPA had one called the GFE, and they combined those to make the TILA RESPA integrated disclosure, which is actually a much better document, and they call it TRID now. Financial deregulation includes the following except financial deregulations.
C.
It's all of those, actually D. So part of the financial deregulation is blamed for what happened, and they just allowed, essentially they allowed banks, commercial banks and savings and loans, all these to cross into other specialized territories like commercial loans or residential loans. And then banks got in over their head because they didn't know what, they weren't familiar with those kind of lending times. And that's part of what caused the problem. Which of the following statements are true about the California Department of, or which of the following statements about the California Department of Veterans Affairs is not true? Ooh, not true. Which was not true.
A and D say almost the same thing, because if it does not fund loans, that's the same as it does fund loans to be sold in the secondary market.
No, it says it does not fund loans to be sold in secondary market. This one says it does fund loans.
Oh, so not true. D.
Correct. You're right. It is D,
Agreed.
because California Veterans Affairs, because they do that land contract, right? They can't sell them on the secondary market. So they actually warehouse them. I mean, so they actually portfolio them. They have their own loans. So. Full amortization is a scheduled liquidation of a financial obligation or an installment basis, allowing for a blank balance at the end of the term.
B.
Yep.
Correct. When a foreclosure sale on a trustee transaction is insufficient to cover the loan balance and expenses, the lender can what?
All of it.
No, not.
Agree.
It is only.
Or if
D.
not A. Oh,
It's only retain the property. So if someone goes through the
Oh.
trustee foreclosure, means they don't go through court. They just do the foreclosure like we talked about. Notice the default, notice the trustee to sell the property. If there's an insufficient money, the only solution is they can retain the property. And if they sell their property and don't make enough money, too bad. Lenders, it sucks for the lender. That's all they can do, right? So. The reconveyance deed is an instrument issued to it by the trustee releasing the mortgage debt. This document includes all the following except.
Thinking C.
Hmm.
It is D.
Yeah, or D.
A deed of trust is a security device wherein the borrower transfers legal title to the trustee with the power of sale clause. Oh. A trust deed provides the trustee with the power to sell the secure property blank to pay off the loan balance in the event of default.
A. Oh, wait.
D.
Yeah, D.
Good job. Tricky, tricky. A type of loan that has been on the lender's books for a year or more has a good payment history is called.
C.
C.
A seasoned loan. Little salt, little pepper goes a long way. The rest of it covers all blank related mortgage loans.
D.
Correct. Federally related loans. Under a mortgage, proof of debt repayment is called a what?
C.
Uh,
Yeah, C.
It's actually just a satisfaction of mortgage. Tricked you. That was all.
Oh, man.
Under an assumption, should the lender agree to a substitution of liability, the blank would no longer be accountable for the loan. What is this?
B. Seller.
Correct. So some loans are assumable, meaning some FHA loans and some VA loans are assumable. That means a buyer can come in and just assume the current payment and balance of the loan, right? You don't see that going on a lot right now because the rates are so low, but if we had a high inflation market where rates are real high, someone with a low payment loan might be, be easier to sell and just assume the house loan, right? Changing reserve and margin requirements are a way wherein the FRB can increase or decrease the money supply. FRB stands for what?
A.
A.
Great. So if A is correct, but what is the FRB doing right now? What is the Federal Reserve Board doing? Are they increasing or decreasing the money supply?
They've been increasing the money supply by buying bonds, and they're going to start tapering to decrease the money supply.
Correct, because they are making what we call a very frothy market where a lot of people have money, right? So correct. The main purpose of the TRID rules is to promote the informed use of consumer credit by increasing the consumer understanding about the true cost of financing. TRID is an acronym for what? Oh, we just talked about TRID. What's TRID?
B.
B?
B as in boy. Yeah.
The trustee in the deed of trust is the what? Who's the trustee?
A.
Correct. The holder of bare legal time. Very good. So the trustee is a neutral third party and they only do one thing and there's one role. They hold the power of sale clause, right? That means that they have the ability to sell the home if the buyer defaults on the loan, right? Even if a trustee includes a power of sale provision, the lender may occasionally decide to pursue a judicial foreclosure for a number of reasons, but mainly because of
A deficiency judgment.
A. A.
correct. So sometimes lenders will not go the trustee route and foreclose on them. They go to court, but they go to court, get a deficiency judgment. Typically, you'll see this only when they know the person in default has a lot of money, right? They know they can try to get their money back, right? So Trustees in a non-judicial foreclosures are required to locate junior lien holders. A consequence of this may result with junior liens being.
D,
B,
It's A wiped out, yeah, so remember, we always, there's the senior lien, and then if there's enough money to pay that, it goes to the juniors, but if there's not enough money, the juniors get wiped out, right, so. To be subordinate is to be inferior to be, or to be.
B,
Or junior, so we have senior and junior, yep, that's it.
B,
The MMI fund is the fund that insures mortgages made by the FHA on single-family homes. MMI is an acronymic name for what?
C,
Correct.
C,
Mutual Mortgage Insurance Company. That is what FHA funds are, mortgage insurance, mutual mortgage insurance company. The provision in the provision in a loan agreement requiring the borrower to immediately pay off the loan under certain conditions called the what?
A,
A,
Correct, the acceleration clause. Trade covers, rules cover loans secured with a mortgage on what? Trade cover.
C,
C,
Correct, one to four residential properties. Tillo was originally under the auspices of the FRB and RESPA was under HUD. They are now under the auspices of what, using the new TRID?
B, Consumer Financial Protection.
Bureau, correct. Consumer Financial Protection Bureau. Good job. Under the Cal DRE, a licensed teammate is allowed to act as a mortgage broker and a loan officer only if they have what?
B,
That's A. So in California, to do loans, you must have a DRE license and you must have an NMLS, we call it MLO, mortgage loan originator license under the National Mortgage License. So you gotta have both licenses to do loans.
okay.
Blank is the legal procedure in which the homeowner's right to property is terminated due to failure to pay the mortgage.
B,
B,
Yep, correct. The blank ratio shows what portion of an individual's monthly income goes to paying debts. Oh,
is it B, back end?
it is correct. The back end
B,
ratio. A developer is in need of a $100 million loan for the financing of a shopping center. One of the most likely lenders would be what? I definitely think it's A.
You definitely think that. Let's see.
Or D, I think it's D.
It is actually B, major insurance companies. So insurance companies during the Great Recession struggled, and some of them had to be bailed out, like AIG, one of the biggest, had to be bailed out because they tend to invest, they tend to be the ones that invest in large commercial projects. And when those went down, they went down too, right? A private money lender loans money to people generally for funding a real estate transaction. A private lender could be a non-bank.
C,
Yeah, C.
Correct. Lien properties are numbered according to the blank of recording. Lien priorities, lien priorities.
Let's say C on that one as well.
Correct. See time and date. A security agreement is a contract between a borrower and a lender, providing the lender a security interest in a specified property pledged as collateral. In the event the borrower defaults, the pledged collateral can be
C again.
Yeah,
Yeah. Some states have laws that give the homeowner the right to redeem his or her mortgage for a time period after the foreclosure sale by paying the foreclosure sale price with interest and fees to the foreclosure sale buyer. This right is known as what?
A.
Yeah, A.
Correct. Statutory right of redemption. Unfortunately, we do not have that in California. A provision in a mortgage agreement stating that a penalty will be charged if the mortgage is prepaid within a certain period of time is referred to as what?
A.
A.
Unfortunately, that is no longer legal. The following are traditional sources of loan funds of institutional lenders, except loan funds of institutional lenders.
B.
Oh, geez. If a qualified individual applies for a VA loan, the appraisal called CRV will be issued by an assigned VA approved appraiser. CRV is the acronym for
B.
correct. The certificate of reasonable value. So for some reason they don't on the VAs, they like to make their own rules and names, so they don't call it an appraisal. They call it a certificate. Reasonable value. Commercial bank construction loans are given for periods when the buildings are under construction. Construction loans are typically termed for
C.
correct 6 months to 3 years because they want you to finish the construction, right? Second trust deeds have typically what? So it's not first, but second trust deeds typically have what?
Higher interest. B.
Correct, because they're more risky, because
B.
they're junior, right? When it comes to foreclosure, so they're more risky. A blank clause provided a blanket mortgage allows the mortgager to obtain partial releases of particular parcels from the mortgage upon payment. Sorry.
The release clause.
Correct, a release clause. Very good. A legal notice filed after completion of construction is referred to as a what?
A.
A.
Correct, a notice of completion. Notice, sorry. A mortgage or and a mortgagee relationship is comparable to what? Mortgage or mortgagee?
C. Yeah, C.
Correct, trustor and beneficiary relationship, right? Because mortgagor is the borrower, mortgagee is the lender, so it's going to be trustor, trustee, right? The reason you use mortgagor, mortgagee in some states, there's not a trustee. There's only a mortgage, two parties, the loaner, the borrower and the loan. So in those cases, it's mortgagor, mortgagee. But in our state, there's a trustor, trustee, and beneficiary or the lender. The disclosure and advertising of credit terms and disclosure of settlement costs are regulated by the government under the TRID rules, which encompasses what?
C. Both.
A.
Correct. Savings and loan associations are blank chartered deposit institutions that lend money mostly for real estate purposes.
A.
B. A, yeah.
Correct. Okay. All the following are true regarding insurance companies except, which one's wrong?
A,
Yes, they don't
Yeah.
make their money from scholarships. They make it from premiums. A balloon loan is what? Example of what? What's a balloon loan?
B,
Correct, a partially amortized loan, because if it was fully amortized, it'd be pay off at close, but if there's a balloon payment, then it's partially amortized. Right? All the following statements are true regarding mortgages except, ooh, what is not true? Oh, Ed, long day.
B,
yeah,
Is
B,
about mortgages are specifically where a private hypothetical or pledge secure, but this is not a negotiable instrument. Yeah, you can't renegotiate your interest rate once you sign it. It's not negotiable. The ratio of the amount of money one borrows compared to the value of the property is known as what?
B,
B,
Correct, loan to value. Good job, guys. The mortgage loan disclosure statement is a mortgage loan good faith estimate required in California. This statement must be kept on file by the broker for how long?
C,
C,
Correct, 3 years. All the following statements are true concerning a deed of trust except, what is true concerning a deed of trust? No. It is none of the above. They are all true. So deed of trust is recorded, yes, because you got to know who's the trustee, right? It is security for debt, yes. So the trustee gets the power of sale, right, to secure the property. And it's real property collateral for a loan, it is. Yeah. In a mortgage loan application, one of the following incomes would not be given full value if the applicant has no history of receiving it or no likelihood of its continuance.
D,
Correct. Any of those things, bonuses, commissions, overtime must be proven to have a history, otherwise they will not count. Commercial bank real estate loans primarily involve blank loans.
D,
or A,
Is B, short term. So commercial loans are typically very short term. They're usually 5 to 10 years. And that's because value of commercial properties tend to decline faster than they do regular homes. What? Oh, hello. Okay. So just so you know, generally they're only 5 or 10 years because of the declining home commercial value. All the following statements regarding Fannie Mae and Ginnie Mae are true except what?
A. Oh, wait, never mind, standby. I don't know this one.
It is.
A,
Should have went with it, got A. So the difference between Fannie Mae and Freddie Mac is Fannie Mae and Freddie were government-sponsored private corporations, meaning they're private corporations, they sell on the stock exchange, right? But they were government endorsed or government sponsored. Ginnie Mae, which handles all the FHA and VA endorsed loans, it is actually just purely government owned, so it is not publicly traded, right? So. A government-backed loan is described as what? What's a government-backed loan? Government.
D.
It
D.
is B. Loans that are insured by the US government. Institutional lenders are financial institutions or intermediaries that pool money of its depositors and then invest in loans and other securities. Loans made by institutional lenders are regulated by what? Who governs institutional lenders?
B or C?
It is C, the law. So there's this group that is not governed by any actual government agency. It's just governed by law, which is pretty crazy if you ask me. FNMA, usually referred to as Fannie Mae, was federally organized in 1938. Today's Fannie Mae is a quasi-government agency whose stock may be bought on the New York Stock Exchange. Fannie Mae stands for what? Kathy, Bella, you there? Chime in.
D.
Correct. The Federal National Mortgage Association. Just so you know, Fannie Mae and Freddie Mac are still in government receivership. That means the government owns and runs them now, still from the recession. Mortgage lenders use front-end debt ratios to decide whether an individual has sufficient income in order to qualify for a mortgage. The front-end ratio is calculated by how? So we have front-end and back-end ratios. So what do we talk about front-end ratios?
A.
It's got to be divided because it's a ratio. All right. The one who hypothecates or puts up his or her property as security for a debt is called the
B.
No, it's all the above because they're all the same, which is the borrower, the mortgagor, and the landowner are all the same person. Tricky, tricky. All the following are advantages of an FHA loan, except what are advantages? What's not an advantage of an FHA loan?
B.
No, it's D. FHA loans require the house to be approved by a FHA approved lender, not a Caldera lender, appraiser. So. The FHA Title I loan program ensures loans to finance the following except. So there's different types of FHA loans. And FHA loans for Title I allow you to do what?
Gotta be B.
It is D, all those. So these programs are often called 203Ks or 203Ks. So there are loans that allow you to do rehab to the home, right? So you buy it with a rehab budget. The Mutual Mortgage Insurance Fund has been designed by it to be self-funding. The FHA collects premiums from LINK and pays lender claims on losses from mortgage defaults. Ooh. So this is A, mortgagors. So remember, mortgage insurance is only there to pay off the lender in case the borrower defaults, right? So the idea is they collect money from a bunch of loans, and a lot don't default. And the ones that money they collect from the loans that don't default, they use to pay off the ones that do default, and that's how they do the mortgage insurance. The borrowers who put down 5% would have a loan of 95% of value to property, resulting in a high LTV ratio. This means what? What does a high LTV mean?
It's less risk, but they still have to buy mortgage insurance. Oh, but not the lender, so A.
B, upon approval of the mortgage loan, it costs to borrow more. If you have a low LTV, you're gonna have to pay more, likely have higher rates and closing costs. A blank loan usually has a 30-year fixed interest rate and typically requires at least 20% down payment. That's not really true.
B.
I've seen conventional
B.
loans as low as 3% down nowadays. So. Initially, Fannie Mae provided a blank market for banks.
B.
Correct, the secondary market is correct. If the promissory note is evidence of the loan, the deed of trust is the
Security.
we have a C. Correct, good job, good job. The blank is a legal right of homeowners to redeem their trust deed and save their homes from foreclosure by paying off the whole mortgage balance. What do we call that?
A.
Correct, the equitable
A.
right of redemption. So during the notice of default, you can actually, that 90-day waiting period, you can actually pay off the back debt, the unpaid payments and interest and fees, and catch up your loan and be okay. But once it gets to the notice of trustee sale, the only way for you to stop the sale from happening is that using your equitable right of redemption is pay off the whole loan. So a promissory note is a written contract between a borrower and a lender and provides the terms of the borrower's indebtedness to the lender. One of the statements is not true regarding the note. Wow, what's this? This is a hard one.
B.
All promissory notes are non-negotiable. So promissory notes are the loans and they can be sold on secondary market and they can be negotiable, right? Calvet loans operate in a different way than do VA loans in that what?
D.
Yes, D, that is correct. A VA loan is different from an FHA loan in that what? VA loan is different from FHA loan.
E.
D, correct. Those are all key differences. A promissory note where payments of interest only are made at particular periods with the principal payment due in one lump sum upon maturity is called a what? This goes back to the very first question that we had.
A.
Correct, a straight note. Calvet home loans are funded through the sale of taxes and bonds that include the following except.
C.
Correct, coupon bond. I don't even know what a coupon bond is, but it's not that. So when Calvet funds their loans, they do it through they do it through the California Veterans Obligation Bonds and also through the home purchase renovation bonds.
John, I had a question.
Yeah,
Regarding a VA loan. Now, do they have to be in active military, or how long after they're out of the military are they still able to qualify
they are able to qualify when you leave the military, depending on your length of service. Where you, if you serve during war and how, and also your pay during war, you'll be issued a benefit, and it's usually an amount of insurance. So if you say you're a lifer, you may get $1 million in guaranteed loan insurance. That means you can do as many Calvet loans that can be guaranteed up to $1 million, right? So,
Okay, all right.
and that's as
Thank you,
long as
Gary.
they have that benefit for their life. Yeah.
For the life, okay, thank you.
Lower down payments for a home and LTV ratios in excess of blank percent will normally require mortgage insurance. What point do you require mortgage insurance?
C.
Correct. Good job. 20% down. To pledge a thing as collateral for a debt obligation while giving up possession, such thing is called.
B,
Good job, Kathy. Hypothecation. So in California, we do hypothecation, right? We give ownership of the home to the borrower. The borrower gives up a bare legal title for a power sale provision to the trustee, and the beneficiary has a lien on the property, right? So that's called hypothecation. An open-ended mortgage is regarded as an expandable loan. All the following are benefits of an open-ended mortgage, except an open-ended mortgage is kind of like a home equity line of credit, right? Something that's open, right? Charge against your equity, to a credit card against your equity.
D or B.
D, correct. So HELOCs,
Right.
what are valuable to them?
here.
Okay. Additional funds can be borrowed immediately. So usually they'll just have a limit. I got 100,000 HELOC. I can just borrow, as long as I don't hit 100,000, I keep taking it out. You don't have to pay additional fees, and borrowing additional funds up to a certain is under the same loan agreement. You get the same terms no matter what. A clause in agreement stating that the primary lender's lien against the property surpasses any other claims is referred to as a what?
D.
No, it's B, subordination clause. Subordination clauses come important. Remember, we go time and date, right? When things are recorded. So usually the lender in first position is in time and date, and any secondaries there. Well, what if there's a solar lien in second position? When that a homeowner goes to refi the loan, the new loan will come in second position because it's a later time and date. So to make the loan happen, the solar company will sign a subordination clause agreement so that they get put back in second place, even though it's a later time and date. A Veterans Administration loan could be used by veterans of military service to what?
D, all of it.
Correct. You can do
D.
a lot of VA loan. The trustee holds bare legal to the property. Bare legal title is also known as what?
C.
No, it is called naked title. Naked title, because it's all by itself, right? Power sale just by itself. It's naked. Discounting. Oh, what is discounting? Ooh, this is a hard concept to understand. Discounting.
That's C.
Correct.
C,
Do you guys understand discounting? How it's used in lending?
I mean, not entirely, a little at a surface level.
So discounting happens because, remember, they're giving you a loan for 30 years generally, right? And we know right now we have high inflation, right? So at this rate, that means 1 year later, my buying power, if you gave me $12,000 in payments, $1,000 a month this year, Next year, I'm gonna get the same $1,000 payments, right? So I get $12,000 next year. But this $12,000 a year later is less powerful than this because inflation went up. So this money is worth less. I can buy less stuff with this. And so lenders are concerned with, well, if they're going to pay out these years, the money I get in the future years is going to be worth less today than today because of inflation. So what they do is they discount the loan, they build it into the rates so that they can make up for the inflation that is anticipated later on in the loan, right? So we call that discounting. So one of the following statements is not true regarding mortgage bankers and mortgage brokers. What is not true? No. What's the difference between a mortgage banker and a mortgage broker?
A,
Is D. Mortgage brokers do originate loans, but they sell them to mortgage, they originate the loan and then they close it with a mortgage banker, right? Mortgage bankers are direct lenders. So mortgage bankers have their own money or a line of credit from a big bank to do loans. Mortgage brokers act as negotiating consumers and lenders. So mortgage brokers usually shop the loan amongst multiple lenders to get the best rate, right? So that's what they do.
So John, there will be all of the above option for an answer, but there will be none of the above on the test.
I was told by someone they got rid of all the none of the above or all the above, but then someone I recently just who joined her office told me she had only one or two questions that did have all the above or none above on them, but most of them did not. She said most of the questions were
Okay.
scenarios where they're, you know, Johnny got a loan here and Susan and then refinanced it, you know, what's the position of those like scenarios, right? So
Okay.
she says there wasn't math for sure, but there was definitely tests on formulas like cap rates and things like that. Like you need to know the formulas. They didn't make you do math, but they made you know the formulas, right? Or how they work. The default occurs when the borrower what? When does default occur?
D, all the above.
Correct. The lending of money at an exorbitant interest rate, usually in excess of the legal rate, is known as what?
B,
See,
B or C, I think it might be C. Yeah, C.
It is correct. C is called usury. Do we have usury in California?
we have it in LA.
There is usury in California and it's 10%. You can't charge more than 10%, except if you have a lending license. If you have an official lending license, you can charge more than 10%. But if you say loan your brother money and you charge him more than 10%, legally, you're doing usury and breaking the law. Because you don't have a license. A loan that is completely paid off at the end of the term loan is said to be what?
See,
Yep.
Fully amortized. That is correct. One of the advantages of the CalVal home loan is that it provides borrowers complete protection to ensure that the borrower's home is safe and sound. Among these insurance plans are the following, except
It doesn't have flood, does it?
no, it does have
that
flood.
was what I was gonna
That's like-
guess, A. Yep,
They don't have multi-party liability. Yeah. The violations of anti-kickback under the Recent Speeches Act are subject to what? What's a kickback?
It's all of the above.
So
Where-
kickbacks are illegal. It means you can't refer people services that require in a real estate or mortgage loan to be done to third parties where you get money back from that parties for that transaction as incentive to refer that business. That is illegal. That's called a kickback, illegal. A tight money market in an economic situation wherein what? What's a tight money market?
D, all of the above.
Correct, which is the opposite of what we have right now.
Yeah.
Correct. Oh, we have finished financing. Oh, we finished really good too. Thank you for joining me on financing. We will be here next week and we will do, what are we doing next week? Let's see here.
I've missed the last couple of weeks because we are closing on a home.
Oh, congratulations.
Yeah, in West Sac,
West Sac. Oh, you're right around the corner.
the better side of West Sac.
What side? I lived in West Sac for about 10 years. I like West Sac.
I guess technically the neighborhood is called Arlington Oaks, right behind Lowe's, that tiny little pocket right
Yeah,
behind.
yeah. Okay. Yeah, that time. Yeah. All right, cool.
So
Those are nice neighborhoods.
almost to the really nice side,
That's good enough. That's close enough.
not on the Broderick side, not on the super nice side, right in the middle.
That's a good side. Well, congratulations.
Yeah, thank you.
So next week we'll be doing transfer property. When's your guys' test happening? So don't know. Still waiting.
I'm still waiting for my additional documents that I sent in
Oh yes, the additional documents
to be opened up.
All right, Kathy, you got a couple weeks.
Couple of weeks, I'm ready. I feel ready now.
Yeah. Okay. Good. Yeah, you should be. You've been on here quite a while, so I know you're.
Long
I know you're on top of it. So I know you're on top of it.
Yes, John. Thank you so much.
No problem. So I'll see you guys next Thursday. We're doing transfer of property. So have a great night. So.
All right, see ya. Thank you.
All right, you too.
Bye-bye.
Thank you. Bye-bye.
Bye-bye.